Hello, and welcome to Mertz Taggart's Behind the Curtain webinar. I'm Corey Mertz, managing partner here at Mertz Taggart. We are a lower middle market healthcare services mergers and acquisitions firm that specializes in representing owners of home-based care companies. And so a big part of our value proposition is to help clients not just maximize the value of their agency, but get the best possible deal when they ultimately transact. And so, as part of our commitment to educating agency owners on building value, we've created this webinar series to tap into the insights from some of the top home-based care buyers across the country who are actively doing transactions. So with that, today we're excited to welcome Rich Keller, Chief Executive Officer at PurposeCare, who will share what at least one strategic buyer looks for in an acquisition. We want to encourage everyone to submit questions by raising your hand. You can do that at the bottom of your screen. All questions will be kept confidential or anonymous, and we'll answer as many as we can at the end. With that, I'll turn it over to Michael Lloyd.
Yep. Thanks, Corey, and would echo and encourage everyone to submit questions as we go here. I think we've probably got 45 or 50 minutes of content with Rich kind of lined out. And we'll use the rest of the time if there's any questions to get those answered. So thank you, Corey, for getting us started. And Rich, welcome. Thank you for joining us. We appreciate your time to go through this with us. Would you mind, just to set the table, tell us a little bit about PurposeCare, you all's strategy, some of the payer mix that you guys are looking at across your geographies, and then just a little bit about kind of the size and your growth strategy up to this point.
Sure. Yeah, no, and thanks, and good to see you both, and thanks for the opportunity. We started PurposeCare a little over 3 years ago in December of 2021, with the explicit purpose of, no pun intended, of creating a community, a home-based solution for people who are dually eligible for Medicare, Medicaid. We're doing that through two service lines, home care and home health. So home care, personal care services, and home health. We've had 16 acquisitions to date. We're in 4 states: Illinois, Michigan, Ohio, and Indiana. I tell people we're really focused on doing sort of really 3 core things: acquiring companies and integrating those companies. I think that's sort of one thing, is because I think integration is core to the strategy. Growing the companies post-acquisition, and then coordinating the care between the 2 service lines, which is really sort of the impetus, as I mentioned before, was sort of creating the companies. How do we leverage our position in the home on the home care side and the personal care services space to get in front of changes in condition on a pre-acute basis and treat them on an acute basis and really keep people out of the hospital, right, and out of the emergency room? That's our value proposition to our clients is to help our clients live their best lives in the community.
Yeah, awesome. So just to take it back to the beginning and sort of the foundation of PurposeCare, that you launched the platform through the acquisition of Purpose Home Health, which was coincidentally a Mertz Taggart sell side client. So we're intimately familiar with
one of 3 that we've worked with. Yes.
One of 3, yeah. Hope to do many more. So what can you talk to us a little bit about those early days and the evaluation process of that asset in Indiana, and what made it the right opportunity for the platform of what you guys wanted to do and grow and build strategically through the Midwest?
Yeah. So we wanted to start with a Medicaid home care agency. Really, the thinking being that that's the footprint we wanted to work off of, and then build skilled care around that. Purpose Purpose had a lot of attributes that really fit well. One was Indiana. We like the state of Indiana. I mean, as you look to buy home care agencies, for those folks that are in the Medicaid space, when you're in Medicaid, you've seen one state, right? So they're all different. Indiana has been and continues to be a good state to do business. Indiana was also in the process of moving towards managed care. It was in the planning stage. They went to MLTSS in July of last year. While that is a disruptor, for providers of scale, we think that's actually not a bad thing for us, because it's a chance to partner with payers in a way that's a little bit more creative than you can do in just straight Medicaid. So that was helpful as well. So we thought that would play well into our strategy of providing home-based care and Medicaid and coordinating that with Medicare funded home health.
Awesome. That conversely, now I'm curious, I want to ask, like, so I'm sure at that time you evaluated several deals while you're looking for that platform, and you've answered like why that was a good one. Was there anything that stuck out on other ones that you looked at that didn't quite make them the same fit for what you were trying to accomplish, and maybe not as good versus what you ultimately landed on?
It would be the same story for deals we've looked at along the journey. I mean, I think it's going to be a function of uh, there were certainly ones in states that were less attractive, but I think one of the things you learn as you're looking at, like, you look at everything. Even if there are markets where you may not be interested in going into, or you think you're not interested in going into, you're going to look at everything. Just
Right.
if nothing else, worst case scenario is you learn something.
Mhm.
So I would say that probably it was markets. So again, we zeroed in on the Midwest. We like the Midwest, predominantly because we like the way the Medicaid programs are structured in the states we were looking at. But and then beyond that, it was probably a function of the leadership that was there and or valuation.
Right, right. Makes sense. And we'll get into some valuation stuff, I'm sure, along the way here. Um, Do you have any advice for agency owners who are going to market and evaluating, the ultimate buyer when they look at, a host of bids from different folks, and what kind of maybe what you all and your financial partner Lorient bring to the table, and just sort of what to look out for when agency owners are trying to choose that sponsor or next partner to take their business to the next level?
So it depends. I think it depends on what that founder owner, if that's the audience, what they're looking for, right? There is certainly the founder owner who's looking to exit,
Yeah.
right? They've built something that they're proud of, and they want to hand it off to somebody who can. There's obviously a wealth building opportunity, and they want to be able to hand it off to somebody who they feel is going to take care of the business that they created. I mean, there's a lot of ownership with a small O comes with that, right? I mean, they want to hand off something that they built. They have a lot of pride into someone who's going to, who's just, they want to feel comfortable that they're handing it off to somebody who's going to take care of it.
Right.
Then you've got folks who want to do a platform, right? So you have folks who are, somebody who's a founder owner of a business, and they're looking for capital to take it to the next level, but they want to run it, right? So our engagement has been primarily with the former,
Sure.
in folks who are interested in selling their business and then backing out of it. So for those folks, I would say, as you're thinking about, an exit, it's, there's a whole host. First of all, I would say you might want to talk to somebody like Corey, but there you go, Corey. But I would say you need to think about it through the eyes of the entity that wants to purchase you, right? What is it that they're going to value? Um, think about all the skeletons in the closet that if there's skeletons in the closet, get them out fast, and make sure they're known. And back into the questions that are going to be asked of you, even if you haven't been through the exercise before, because you probably haven't thought of all the questions. They're going to want, anybody who's looking to buy is going to want to understand, like, all right, if you've grown, how have you grown? If you've not grown, do you know why you haven't grown? Do you understand where your margins come from? And what is your succession planning? I mean, if you are interested as the founder owner in leaving the business, who's behind you to run it, right?
Sure.
So that's key. Now, there certainly may be people who want to buy your business who are perfectly situated to put somebody in there to run it, but you may narrow down your opportunity. So, they can manage that post close, but I think as an owner, you want to answer the question. All right, if somebody were to buy this company, how are they going to run it if I wanted to leave?
Right.
And I think that's a big one. And again, I think that and this and just thinking through all of this, all the skeletons that people are going to find because they're there. There was whether it's been some survey or a lawsuit or something. There's always something there. So get it out front.
Right. Yep. Absolutely. So I think this is maybe further down our list, but you've touched on it, so might as well talk about it a little bit here. But can you talk a little bit about what that transition looks like, from your perspective, at PurposeCare and the number of deals that you all have done, from owners who, are looking to exit in your example, and what their 6 months post close or a year post close look like, and what kind of you all expect, and how that dynamic plays out after a transaction?
Sure. Again, it depends on the partner you pick. I will tell you our process and how we go through it.
Mhm.
What's critically important to us is that there is somebody there, and build to my last point, who's able to run the business and wants to step up into that role. I, in my opinion, we're our ability to be successful in acquiring companies isn't just to acquire companies, and I think I speak for a lot of folks who do what we do. So I don't know that this is that we're different than what you'd find from others that are in the that are heavily acquisitive. But key to us is we're going to want to integrate that company into our business, right? The way we look at our business is um, the Purpose Care Enterprise's role is to support the agency that we acquire in growth and clinical excellence. Everything else we're going to get out of that, we're going to take off that business. HR, IT infrastructure, finance, all the stuff that is not directly related to those to those two core things, which we find are really the things that the agency wants to focus on, or at least the folks who are not maybe not the founder owner, the people who are in that the people who are in that business day in day out. That's what they want. That's really what they want to focus on. So our goal is to take that up. But in order to do that, we've got to integrate the business. All that to say is if we integrate, we try to do it in such in a manner that creates as little disruption as possible.
Right.
But we're going to put a purpose care we're going to put a purpose care fingerprint on it. And while I think we're great, I think you're going to there's we're going to somebody who's an owner, a founder owner who spent 10, 12, 15 years building a company. It's unlikely to come in and do things exactly as they'd want to do it, right? So I think it's what works out best for us is we have a transitional process with a founder owner helps us through a transition, and then they move on.
Sure. Yeah. Makes sense. I know, like, ideally, like, there's as little disruption as possible, but there's always going to be some disruption along the way.
It's a balance. I mean, we're not a turnaround company. We buy businesses that we feel going in are good businesses, right? So it's really important to us that we don't screw that up.
Right.
Right? So if we buy a company that's doing a good job, quality's there, the growth is there, it's performing well. The last thing we want to do is screw that up.
Yeah.
So it's a
Yeah.
balance between like you want to stay true to that, but I'm going to have to do some stuff to get it integrated. Otherwise, we're just piling up businesses and not really adding any value.
Sure. Sure. So that's a perfect segue into kind of what you all look for in a transaction. So that's kind of next on our list here. And by our count, and maybe you have some news from us, we can break news here, but we've got 16 that we've counted that you all have done over this period since the initial platform was acquired. Can you talk to us a little bit about what you look for in an ideal acquisition target? Obviously, knowing what you've said already about the geography and the payer mix and kind of what your strategy is, but beyond that, like, what you're looking for in an attractive acquisition opportunity.
Yeah, I mean, I think certainly it's going to be, you're going to you want to get through due diligence. It doesn't have to necessarily be growing gangbusters. I don't want it to be shrinking. But I would say as often as not, maybe more often than not, the agencies we've acquired were relatively flat in growth. Um, but going backwards is not great. So one bit of advice that folks looking at, if you're looking to come to market with something, you want to have a decent trend going. I would wait until you are, growth helps. If you want to maximize what you're going to get, what you're going to return on investment and the attractiveness of someone like us, growth certainly helps. Doesn't have, but again, I think as long as it's not going backwards, that's really the critical piece. I mean, while it's hard to put a pin on it, I will say culture matters, right? One of the challenges that you have in this, and I think any seller is going to wrestle with is who do they bring under the tent when they want to go through a process, right?
Sure.
Where we have the most success is somebody who's going to be around after post close gets under the tent. That's always ideal. So we have some idea of what we're getting into, and we can get our arms around culture and begin to build a relationship with that person so that we can be successful. The key to the whole thing is for us is, at least for me, it's during the process, myself and the corporate development team is focused on building trust with the owner, right? They need to trust us because there's always back and forth. You've got lawyers involved. This stuff's going to come up. My conversation with the founder owner is like, look, the lawyer's going to get involved. This is what they do. We need to have a direct line so that if something comes up, let's not let their interpretation of how we feel get in the way of having a conversation. So, but you need to have trust in order to be able to have that conversation. Post close, you need to be building trust quickly with the folks who are there, and that's a lot easier to do if you have access to them in the early stages. And quite frankly, from what I've seen on the seller side is if they don't do that, it's like moving your house. Like everyone thinks like, it's not good. And then once you start, you're like, oh my God, like the amount of work that goes into transacting a business is enormous. And so so many founder owners, and Corey, I'm sure you see it, try to do it themselves, and they wind up biting off way more than they can chew.
Yeah, you're absolutely. I'll chime in on that. Yeah, you're absolutely right about that part of it. And the second part, Rich, as you mentioned, and we hear this all the time from buyers. It's all about transition risk, right? So, if as many key folks, and I'm not necessarily advocating for this, but there is some benefit to it if you do it the right way. Bringing some key folks under the tent to help with some of that. Participating in some of the management discussions. And what we have found to be effective is incentivizing those folks with some kind of a stay bonus or transition bonus that will keep them, at least from the seller side, up through the end of the transaction. And then by then hopefully the buyer has built some goodwill with these folks and ready to move forward.
That's a great point. In fact, that's happened in several occasions where that's exactly what's happened. Is that the individual or group of individuals who are selling the business set aside some of that proceeds for that or those individuals. So I think so. Back to your question, Mike. Like, what are we looking for? There's the obvious, right? Is it a good business? Is it compliant? All the stuff that is table stakes. Beyond that, and then strategic fit matters for sure. I mean, for us, there's nuances, right? We're managing puzzle pieces. We do home care and home health, and we try to match them up in the markets we're in. So if a lot of home health over here, home care is important, and vice versa. But culture matters. So to the extent we can get our arms around that, that's critical. And that sort of leads to this idea of trust. I mean, the most successful deals we've had have been when we've established a trust with the owners out of the gate.
Yeah, no, I mean, I think that makes sense. And I think like what we find is that person that you ultimately will be leaning on through a diligence process or a transaction, the owner or founder, may need to lean on that person anyway. And so bringing them under the tent to, through the diligence process, you have a question about a billing report or something that the owner or founder may be, a few things or steps removed from. That person becomes incredibly valuable and also builds a nice reputation with, the acquiring company and, has some growth opportunity for leadership if they, are able to really show how much they know about that business through a transaction as well.
No, yeah, that's a great point. 100%. Like that's what, like you meet them and you're like, oh wow. I
Yeah.
mean, it actually helps secure the deal if it's the right person. I mean, it could
Right.
blow up in the face if it's not. But if it's
Right.
the right person, it can help secure the deal. Because as we come in and we see something like, oh, this person's pretty impressive. Like it will definitely help us, give us momentum going into the deal. And the reality is like they probably already
Right. Right.
know.
Yeah, after the fourth or fifth email from the owner asking
Right.
for a report that they've never asked
Right.
for,
Right.
they start to get an idea. So, yeah, no, I appreciate that. It sounds like a very obvious question, but I appreciate kind of where you took that as some good detail there. So, um, you know, on that same page, what is the biggest challenge that you all have found sourcing these appropriate opportunities? So where do you guys feel like you kind of struggle or run into walls as far as finding, sourcing, and bringing these across the finish line?
I
That
was thinking about that. It's a tough one to answer. Like I think, sorry about that. It's a tough one to answer. I think that it is another oak getting a hold of here. I think that there are no deals. You're having trouble finding deals until you're not. I mean,
Right.
it's if I could nail that one down, it would be
Yeah.
fantastic. I mean, maybe we can get, maybe we get one of these AI, tools to help us sort of figure this one out. But I think that really is it. Like our corporate development team, Cam Courts who runs it for us, and Jake who makes the phone calls and is doing all the outreach and business development, like they sit with us every Thursday going through our pipeline of what we're going on and see and it's either it's what have you done for me lately, and we're either flooded with opportunities or it's totally dead and dry. And if I could tell you exactly what is the impetus of one versus the other, I mean, at the end of the day, it is simply just volume coming through the top of the funnel. Having said that, we've learned a lot along the way on questions to ask earlier than later,
Right.
so we don't wind up getting into a deal that we then can't close for one reason or another. So what was a list of maybe one or two questions is now probably 13 or 14 just to kind of have, immediately after we sign an NDA.
Right,
Right.
right. Yeah, and looking back on that question, maybe that's a bit self-serving from my perspective too. I'd like to know the answer to it. How,
Right.
we end up with a good problem to have would be more deals than we can handle. But I think if we look at the quarterly reports that we put out, there has been a volume decrease generally speaking over the past couple of years, and we're optimistic that that's changing a little bit. I think Q1 was overall stronger than we've seen in a while, but there seems to be ebbs and flows in the deals, and we do the same thing, right? There might be 10 things to look at one week. The next week we don't have anything to look at and we're scratching our head, not knowing where the next one's going to come from. So I totally understand that ebb and flow as well. So from there, maybe we can transition just and talk about service lines specifically. And some of these things will cover both of the service lines that you guys service, which would be home health and home care. Home care having kind of tentacles off of it as far as different payers and how those businesses operate and run every day. But if we talk about both of those, what are the just sort of if we look at a home health business specifically as opposed to home care, the attributes that you're looking for, you mentioned clinical excellence, there's having some sort of bench strength. How are you guys evaluating the home health business, maybe in opposition or in tandem with how you're looking at a home care opportunity?
I mean, star rating matters, right? I mean, I think it doesn't have to be. I mean, star ratings matter. It's just it's an indicator of how well of how well they are running of how well the operation is being run. I mean, doing well on star ratings it's very doable if you're committed to putting in place the operational processes you need to achieve the star ratings.
Right.
I mean, it's easy, but it's doable.
Right.
Um, I think certainly mix and the home health side. I mean, how much is Medicare? How much is straight Medicare rather, and how much is managed care? And not that necessarily one's the right answer or wrong answer, but then when you go into managed care, like, okay, what are the contract rates? I mean, and who are they with and what are the rates at? I mean, so if you've got if you have, I mean, you'd be surprised. There's a lot of folks out there who have contracts that are paying a per visit rate that's below their cost.
Right.
And that's just not, I mean, that's not scalable. So understanding the market from that perspective, what the payer mix looks like, and then how they and where the business comes from, right? I mean, certainly our strategy is to marry up home care and home health so that they work with each other. But if I'm just coming into the market with the home health, I'm certainly we really don't want to go backwards post close, right?
Right.
So
Right.
we want to make sure we can realize the results that the agency has achieved before we closed on it. So we got to make sure that we can do that it's scalable.
Sure. Sure.
Rich, you mentioned payer mix, between traditional Medicare and managed care fee for service, and finding the right balance there, which is, I think everybody has that challenge. Seems like some folks don't have that challenge. They're able to just do a bunch of Medicare work, contrary to what the market around them is doing in a lot of cases. How would you look at an opportunity like that where, they've got the Medicare piece nailed? That's pretty much all they do, but they don't do much managed care, and the market is maybe, has maybe 60% Medicare Advantage penetration.
I think it's going to be very challenging to grow that agency.
Okay.
I mean, unless, depending on what they figured out, I mean, we've done it. There's a couple agencies we picked up that were 60%, 80% Medicare fee for service before we got there. But which is great, and it has a great contribution margin, but you're not going to grow it. So I think, but it's a great platform to start from. I mean, for us, as long as there's, if you've got that to build off of, then you can work with managed care. I mean, and you've got decent star ratings, you can, it's not
As
easy.
long as those referrals are sticky, right?
As long as those, yes, exactly. So the short answer to your question is, and I'd love to find the example where I'm wrong. It's difficult if for those agencies, at least in our experience, that are, greater than 50, 60% Medicare fee for service, and they want to keep it that way, the growth is limited.
Sure.
And look, if that's your business and it probably delivers a nice contribution margin, you can make a good living at it. So there's nothing wrong with that. It's just a question that we're in the business of growing the businesses. So
Have you guys had some success in, if you look at a business that has, let's just say it's 50-50 Medicare, and then, commercial payers, the other 50%. Have you guys had some success acquiring that business and then negotiating the contracts for the Medicare Advantage stuff up just based on your scale and, having them answer the phone, I guess, essentially?
define success. Better. So rates better than where we started.
Okay.
I would not say that they're anything, nothing great, but I will say that we've seen some movement. It has been, and movements is probably a stronger word, but yeah, I mean, I think we're not big enough to get an enterprise agreement,
Sure.
at least from what we're being told so far with some of the big nationals, but certainly some of the regionals we are, and we do better there. We definitely do better there. And so yes, so we've had some success with our scale helping us get there, and star ratings matter. And I'm sure everybody's tired of hearing this. Data matters. If being able to demonstrate your value proposition, star ratings for sure, but things like how are you doing on hospital avoidance, those things matter.
Sure. Sure. So I'm sure you probably look at that also from when you evaluate a home health agency from a referral source diversification, where are those referrals coming from? And if they're coming from the hospital, then how many of those are we keeping out of the hospital? Because that's ultimately in the back of your mind, conversations that you're going to have down the line with, the payers and such when you're trying to work through the, negotiations on the contracts. Do you look at all of that?
Yeah, no, we track. I mean, we track our hospitalization rates. Certainly, we're like most agencies probably using SHP for feedback there, but we track. We use subscriptions to the health information exchanges, so we're getting admit discharge data from in the states that we're in to understand like when do our patients at the hospital, not just on the home health side, but on the home care side. So that, and part of our coordination of care exercise is that, like, I know if we know if we think our home care clients are at risk of going to the hospital or do go to the hospital, we now have a companion home health agency that can get in there and pick them up. Either
Yeah.
get in there on a pre-acute basis before they wind up going to the hospital, or if they wind up in the hospital, which they're going to do. I mean, it's still a very vulnerable population. We're gonna, we'll make sure that we pick them up on, on the way out.
Yep. Awesome. Um, So yeah, and then also I guess clinically or along the same lines, have you seen cases of, we love to, just start with all of the agencies that we evaluate being 5 stars. That'd be awesome. But in the cases where you evaluate an agency who's strong in many of the facets of what they've built, but they may be down at 3 or 3.5 stars, and maybe getting penalized from a value-based purchasing standpoint. Have you seen any upside lift on, being able to get those star ratings and it be tangibly in the reimbursement kind of tangibly be increased on the value-based purchasing side, after you guys are able to do your thing from the PurposeCare?
So I think that's to come. So I do believe we're going to see that happen. I mean,
Yeah.
the value base has such a long tail on it that we've only been at it for 3.5 years. We only in the first year of having any impact on
Right.
that. And even the agencies that got hit with it for the first year this year, we had nothing to do with it, with the history they had that got them to what the payment is this year.
Yeah.
So, but I will say that, knock on wood, with what we're seeing on the movement we've made, getting our agencies to, and we're averaging, I think, 4 stars. We may even hit 4.5 the last month we ran it through SHP. Now this is not what's up on Medicare Compare, but in SHP you can track them in real time. So I am optimistic that we will start to see some return on the work we're doing to get favorable results on value-based payment.
Yeah, cool. Yeah, I've always seen that as there's got to be some upside there in some of these transactions where, if you're able to imprint your clinical programs or even just the logistics of getting the star ratings right based on surveys or whatever, being filled out appropriately, answering the questions right, coaching the patients on, who you are, even because there might be 7 people in there, doing different things.
Well, and it's going to cut both ways. Like, I think it's
Right.
important to think, if you have an agency you want to sell, like, it's going to cut both ways. Like, we'll be able to figure out, like, what's going to happen to your rates in 26 and in 27, and that's going to get factored into evaluation. Like, so if you're pricing a deal off of EBITDA, you're going to say, all right, well, here's your EBITDA today, but we know revenue is going to take a 2% hit or 1% hit, so here's the new EBITDA, and that's what it's going to get valued on. So I
Right.
think so as you're thinking about your agency, like, you want to be thinking ahead, like, okay, that what I do today is going to drive, I think, 27's revenue.
Yeah, absolutely. Absolutely. So to put a bow on the home health stuff, and then we'll talk about personal care a little bit. But you've answered this in as many words. But if we're what would be, if you had to highlight a few things that might compel you to pay a premium for an individual agency that you're looking at, that might be over what you would pay just in a vacuum on something ordinary, I'll say.
Certainly growth is a big one. I mean, if you
Yeah.
can demonstrate, we've had a growth. Now, if the growth is too good, you can be a little suspect. But
Right. Right.
if you have solid, I mean, if you have low double-digit growth, that you can sort of understand how it's getting, and, like, that's, you're gonna get paid for that. I mean, that's and we understand why and how you're doing it. That's probably, if there's any one thing, that's probably the biggest thing, other than sort of strategic fit, but that's going to be unique to the buyer. I mean,
Yeah.
every buyer's got a different interest on that front,
Yeah.
but that's one for sure. I mean, and then there's the stuff to not do that's going to get you sideways, and I think that's the, those are the big ones. I mean, just getting in front of the stuff you'd want to know about a company if you were going to go buy a company. Do you know what I
Right.
mean? I mean, as an owner, you probably know about the things you'd ask about. So you want to ask yourself, though, those questions early on, and either remedy them or get them on the table, and so we can put a box around it.
Right. Right. Makes sense. And I guess maybe on that piece, like, do you have any specific examples or things that are sort of red flags early in the process that, agency owners should be aware of, like if they're, you know, either on this call or
Yeah, I mean, I think get your arms around wage and hour. Make sure you understand exactly how that works.
yeah,
This is one of my nits. I don't know if you guys see this. I hate ERTC. I hate this tax refund money that I think it's going to come back. Expect a buyer to tell you to put that aside in escrow for years. Um,
Yeah. Yeah.
that one I don't like. And then just the regular, and then I think obviously it's the compliance stuff. Sorry, Corey, you were going to say something.
Well, I was just I wanted to ask and maybe expand on the ERTC thing as I understand, and I think I understand where you're coming from is, you know, there's so many companies out there, right, that were doing it the wrong way. Not necessarily the agencies in this
Yeah,
case,
we're getting bad guidance.
but yeah, they're getting poor guidance, right? And a lot of that money is gonna, you know, there's a risk of that money getting clawed back at some point.
Yeah, yeah. So I would say if that's if an owner has it out there, they get the money back, lock it up in an account somewhere for the next 5 years.
Fair enough.
awesome. Okay, so you know we've talked about some of the, you know, things that you would pay a premium for, you know, in a hypothetical situation. We've talked about some of the red flags, you know, appreciate that. Um, a lot of from the Mertz Taggart side, a lot of the folks that we talk to early on in a process, and they may be 2 years, 3 years away from ultimately transacting their business, are some of the best clients to work with because they're thinking about things the right
Yeah.
way. They're preparing their agency. They're pulling some of the data you've talked about together. I was just going to ask you, Rich, like if you were talking to an owner that said their ultimate goal was to sell the business in 24 months or, you know, 36 months or whatever the case would be, what type of things from the buyer's perspective would you be focused on? I mean, you've answered this in many different ways already, but if you had to highlight a few things you'd be focused on just for forward thinking into a transaction that might be a year, 2 years, 3 years away. Obviously the growth, Corey and I joke about this
Who's
all
going
the
to
time.
run? I would say who's going to run it when I leave?
Yeah.
Who's here to take the reins?
Yep.
I think is a big one. I think a lot of agencies, you know, a lot of businesses get involved in multiple service lines. You want to be careful of that, right? You really want to, if you're in a service line that's not really, then you may want to skinny it down and focus on what you're really good at, right?
Yeah.
If you're trying to do too many things, you're going to, that all, somebody coming in to buy it is going to discount that. They're gonna be like, all right, how do I get out of this business or get out of that business? So, I mean, if you're doing more than one business and they're truly integrated and they help each other out and it works, that's great. But if they're not, if they're two separate silos, then and if there's one that's a drag, then you may want to not do that one. And I would not start a new service line if you're looking to get out in the next 24 to 36. And the last one I would say is start putting your contracts and everything in a start build out the Dropbox now. Start putting whenever you sign a contract, create a structure of all your contracts and all your information so you're not hunting for it in 24 months.
That's
Yeah.
right.
No, that's a good point. And you know, we talk to folks all the time about just that. And, you know, we obviously have a number of sample due diligence checklists, right, by service line that, you know, if folks are interested, be happy to share that with them just to help them get started.
Every buyer who's legitimately looking to close is going to be asking every owner for a lot more than they think they're ever than it's going to be way more than you think it's going to be.
Yeah. Yeah. And I think it's important. You don't necessarily have to pull it all together because some of it's, you know, timely, but at least look at it and say, and know where it is, right? Know that's accessible and you can get it fairly quickly. So.
Absolutely.
Oh,
Okay.
by the way, while I've got to say, I think I misspoke earlier in the session. I had encouraged folks if they had questions to raise a hand. Maybe that's not the right box. Pardon me. We're working out the kinks here, but I think it's the Q&A box. If you do have questions, I think if you click on that, you should be allowed to ask questions. Good.
Perfect. Yeah. Thank you. So if we move into personal care, I think the line of question is a little bit different. And I maybe just want to talk, specifically about the personal care side, and then you all strategy around the different payers, right? So obviously there's an umbrella of different things that fall under that, non-medical personal care umbrella. So we've got Medicaid, private pay, and the VA, right? Is all kind of common ones that we
Yep.
see. And as you evaluate those, maybe just curious strategically how you're looking at those different payers. I know we're going to talk a little bit about reimbursement risk in a few minutes, but like how you're looking at those payers, your strategies, and kind of preference, and how you look at those different service lines under the personal care umbrella.
Sure. So I think I would look at private pay. I'd kind of put in its own box. I
Yeah,
mean, it is operationally you're doing the same thing, but it's a different business. I mean, there's a
sure.
much more direct to consumer marketing aspect to it. It's a much more high touch. So it's its own animal. I think that just my experience, and I'm sure people have had success in other ways, but our experience is, and where we're the way we manage it is it's its own business. It's run differently, and with a much more marketing aspect. The VA business is about the relationships with the local VAs. We'll marry that up with our Medicaid agencies as well. Um, and so I think we kind of look at them separately.
Okay.
Make sense?
Okay. Yeah, I think so. I think if we're as far as like operationally running the business, that makes a lot of sense. Like there's probably a lot more commonalities between the um Medicaid and VA business than there is the private pay, just simply because of the payer and how ultimately those.
Yeah. I mean, I think you could do VA out of either one of them, to be honest
Sure.
with you. But I don't.
Mhm.
I would. I mean, the Medicaid waiver business, which most of it tends to be, is
Yeah.
is its own. It's just a different business. It's more community based work. I mean, if you're doing any kind of marketing, it's partnering with the community. And you're obviously working with managed care plans or the AAAs for referrals, and it's a bit of a different animal.
Are you guys having success with entering the market in this personal care space, whether it be Medicaid, VA, or private pay, and then ultimately marrying that up with the hospital or the home health services and being able to track like what that flow looks
Yeah,
like?
no,
Yeah. Okay.
that's our business. So
Yep.
we've spent a lot of time over the past couple of years really building that out, which is not which is I mean, and it's funny, like it's one of as I talk to potential owners that in acquisition opportunities, we say like here's what we're doing, like we're you're a home care agency, this changes the condition, where do you think there's an opportunity to get in front of them? They go, yeah, no, we get it. And
Yeah.
on the home health side, clearly we think there's an opportunity to pick up to pick up people who need care, whether it's still in their home or if we're coordinating care post hospital discharge. So I think to a person, there's nobody says, well, that doesn't make any sense. I think it's actually doing it is the hard part. I mean, so
Right.
the doing it part is there's systems aspects to it about getting a change in condition, being able to take that information, get it to hand it off to home health and actually coordinate care. So there's a lot of work we've done on that front. I mean, to the tune of, where we've got, two agencies sort of connected and working together in markets. We have home health agencies where 50% of their census is coming from a home care panel. And across our market, we've got about 10% of our home care business is in the home health ADC somewhere, right? Where home health is an opportunity, meaning they've got Medicare, they've got they're otherwise eligible for care through Medicare. Um, so we've been able to make that work. Culture is the hard part, right? To make that getting people to work together on that front in a way that they haven't worked with another partner is not easy, right? It takes work and it takes dedication and commitment to the cause, which is why when I opened the call, like the idea of integration is so critical to what we're doing, and that's really, that's how we bring value.
Yeah, and I asked that just from the lens of like if there's, folks on the call or, after, that we're talking to that really being able to on the personal care side identify those things. And again, going back to the data and stuff would compel someone who that's their whole strategy to, you know, be able to potentially pay a premium for that asset if you're able
Oh,
to
yeah.
say, like, you know, across my census, I've tracked these things, and I think there's an opportunity to layer in home health services here.
I agree. No,
Uh,
I think that's a great point.
yeah,
Even if you're not doing the home health yet, but if you could
right.
say, if you can say
Yeah.
like, well, look, I think these people, here's this opportunity. I think that's a great point.
Yep. Yeah.
Yeah.
So
Even hospice. I mean, we don't do hospice, but if you know, if you have an arm, if you're a home health agency and you've had your arm around with hospice opportunity, you can be able to say like, here's what we can do with hospice, and then that makes you that much more attractive to a platform that does both home health and hospice. If you're coming at it to a place where you know I'm a home health agency, and I know I have a pretty good idea of how much what percent of my ADC goes to hospice and why. Now a platform or somebody out there who does both, that's you just increased your value to them.
yeah, I've talked to plenty of home health owners and operators that say, like, oh yeah, I mean, I send 5 hospice referrals a week to so and so down the street for
Yeah.
my patients or whatever. And I think that's a big piece, like being able to capture that data and ultimately speak to it for someone who's implementing that strategy, whether it's home health to hospice or personal care to home health or any.
No, and increasingly you've got folks who are doing both. I mean, I think the
Right,
last, you got the last one you did, these guys, they're doing hospice and home health. You
right.
show up and say, I'm doing both, and here's how I do both of them. You're going to make you more attractive.
Awesome. The last thing that I just wanted to pick your brain on, Rich, before we maybe open it up to some questions, Corey may have a few things, is just want to talk. It's increasingly hard to track because it seems to change every week here with the, you know, the political scene. But what do you see as far as what are you looking at around the headline risk for Medicaid as a payer? Reimbursement wise, and also maybe the VA too, and how you're looking at those rates that seem to be fluctuating year to year. And what are you guys thinking internally, and especially maybe in the Midwest, what you're seeing? I think when these rates are changing, you do see trends in regions, right? So, and where you're operating and focused in the Midwest, how do you view the sort of the headline risk on Medicaid, and then just ultimately the reimbursement uncertainty across the different payers on the personal care side?
Look, I mean, I think I said before, like you've seen a state, you've seen a state. I think the
Yeah, yeah,
challenge on the Medicaid side is, state funding accounts for, at least half, maybe up to three-quarters, depending on the state you're in. And much of the home care you provide that's Medicaid funded is waivers are optional. So if a state's got to fund, if a state's got to figure out how to fill a gap that's created because provider taxes just got cut, or they can't use provider taxes, or they want to fill a gap that's created for the for the for the expansion population, waivers are an easy place to go. So I don't have a great answer other than to anybody on this call. I think advocacy is important because I think there's a ton of unintended consequences as a result of actions that could be taken. And the reality is, a nursing home is a guaranteed benefit. Home care is not, right? So if home care stops, that's where they're going. And it's a lot more expensive, and we all know that. But I will tell you, I've spent a lot of time talking with legislators. I spent some time down, with a group that we work with, Partnership for Medicaid Home-Based Care, and that's not necessarily it's not always understood as well as you think it would, as well as you think it should be.
Mhm.
My pitch to anyone in this call is advocacy is important.
it
And
seems so obvious that someone in the discussions will raise their hand and say, actually, cutting the Medicaid benefit for home care will cost the system money ultimately. And
yeah,
that's obvious to us and everyone on the call, but I don't know that that message is translating, you know, to the powers that
it's
be.
now you've got people dealing in the hundreds of billions of dollars, and so these things get lost in the shuffle. So it's like everything else, you got to be the squeaky wheel.
Yep. Yep. Understood. Understood. Well, I will use this opportunity to call for any more questions from the audience that we may have. And in the meantime, Corey, I think there were a few questions that you may have for Rich, just to kind of put a bow on our conversation. And thank you again, Rich, for having us. We've got a few minutes left here, and Corey has a few questions up his sleeve that I'll let him answer or ask, I should say.
Well, only if we had time. And again, I always like to take the opportunity to ask this question, Rich, to you or any other buyer, and appreciate a candid response. You haven't mentioned this so much talking, encouraging folks to engage. You did mention talking, engaging with a firm like us. I guess, How do you all look at deals through an advisor, positively and negatively? I know you guys source your own deals,
Yeah.
but some you look at through advisors. Do you have a preference one way or the other?
Corey, I will tell you that it depends on the advisor. Working with you guys, and this isn't a paid plug, but I think working with you guys, that's why we've done 3 deals. I mean, I think you guys are a good advisor to your clients. I think that is not always the case. I mean, I'm not naming any names, but it's not always the case. So I think in a case like where you've been involved, and there have been other examples, but in the 3 deals we've done with you, all of what we've talked about to somebody who hasn't been through this process might be new, right? And it's a lot. And so I think I think having somebody in there, having a buyer seller in their court, helping them get it done is, again, I don't know how the fees work, but to me is probably well worth it. It is, what should be, I will tell you this, when we haven't had, even sometimes when we've had an advisor who wasn't very good, we've had a deal that should take 60 days could take 8 months. And nobody wants that because the problem is when it takes 8 months, your business suffers. And when your business starts to suffer, the people you're selling your business to look at the business and go, oh, wait a minute, you're now what was an EBITDA of X is now an EBITDA of X minus Y. So it's worth less to us now. That's never a fun path to go down.
Yeah.
So I think speed to execute is critical, and we can move pretty fast. When we don't move fast, it is usually because the owner is not moving very fast.
Yeah, excellent point. Yeah, thank you. Planning is key.
Planning is key, and moving once you agree to do this, you got to move.
Yeah.
Which gets back to having somebody else on the tent to help you out because otherwise it's a lot.
There was one question from before the webinar that was submitted that I'd be curious your answer to, Rich. So this one is there. How do you see that they're calling this survival potential for small providers and just sort of like I know you've been there on when you guys were just getting started versus where you are now. But if you're you're at a owning and operating a small agency, the survival, what did they say? Survival potential and just sort of like any keys that there's inflection points, right? So do you have any you don't have to expand on this a ton, but sort of inflection point strategies or management ideas to get it from 4 million to 6 where you want to be, or like some of those, getting your business at a small, like how to weather the storm to get it where you want it?
Uh, Look, I think it's going to come down to operational excellence, right? I mean, how committed are you to the business? I mean, this is obviously the answer sounds sort of rote, but I mean, it's going to come
Yeah.
down to operational excellence. It's going to be how committed are you to the business? I mean, at the end of the day, either somebody there is committed to the business 24/7 that works for the founder or the founder is. If you're putting in 20 hours a week and just sort of hoping it's not going to happen, right?
Right.
So it's commitment to the business. And I would say, again, if it's not the owner operator running it, you want a professional in there running your business. I think once you get to if you get to a certain scale, you're going to want somebody who has some experience. Doesn't have to be in home care per se or home health, but it helps. But certainly someone who's run an operation, like be thoughtful about who's running the key operational roles day to day. And I'm coming at it thinking of, as I'm giving you the answer from somebody running a big business and from more of a corporate perspective. I'm not an entrepreneur, right?
Right.
I came in and built this business. I couldn't be perfectly honest with you. I've never done that. I've never started a business from zero to get to the numbers that you're talking about. So I have hats off to the folks who do that, and they tend to do quite well in these exits as a result of doing all that. But to take it to the next level, what I've seen is some of the agencies who haven't done that is they need to invest in the professional expertise to get that done. Get the right people there, and yes, you may have, the person who's been with you for 10 years or the family member. That's great. That may not be the person who's going to take you there to the next level.
Sure. Awesome. That sounds good. I appreciate that. Corey, did you have anything else for Rich or anyone else?
No other questions for Rich. Yeah, Rich, thank you.
Yeah, thank you guys. This was fun.
Yeah, we appreciate it. And just for anyone out there, we'll be putting out some summaries and some additional clips and things from Rich. And if you guys have any questions, feel free to reach out. We'll be happy to, make an introduction to Rich if anyone, wants to, further pick his brain. And hopefully this is a resourceful, helpful thing for the industry, and we hope to continue to do more of them. So thank you, Rich, and we will look forward to maybe a year from now doing Rich Keller Behind the Curtain too. And you could give us the next updates and how you guys are doing.
Awesome. Thank you, guys. Good to see you
Yep.
both, Corey, Michael. Have a great
Thank you
weekend.
guys.
Thanks, everyone.
Appreciate it.
Bye.
Have a great weekend.